Okay, let's bring on board Sudeep Bandyopadhyay as well and talk about what he's making of the market right now. Sudeep, still underway for the Reliance AGM. They're looking at doubling their revenue and EBITDA for the Jio platform in about 3 to 4 years. The market, of course, is excited with that. Ahead of the AGM, as soon as the bonus share announcement itself came, you had the stock spike up about almost 2%. But what are you anticipating? What could be more meaningful that the street is anticipating realistically from the AGM today?
Well, definitely some positive announcement on the new energy business. I think that's one area which the street would love to hear concrete plans and timelines. I think that's very important. The second thing, which of course the market has been talking about for a very, very long time, has been the demerger listing or whatever other strategy they have regarding the two businesses which are reasonably mature, Jio platforms as well as retail. I think these three pieces of information is going to be critical, and definitely the market will be watching for that till the end of the speech. The announcement of the bonus before the AGM was definitely a positive sentiment booster. I think whatever little I heard, there is a lot of talk of AI going on there and how AI is going to change the way service delivery is happening and the way the customers will be benefited. I think that's what has been the theme till now as far as the Jio platform is concerned. Let's wait and watch for further announcements, if any.
Oh, well, yes, that green energy focus is something that one really needs to watch out for. But right now, a big headline coming in for Jio, at least, wherein they're targeting doubling the revenue and EBITDA over the next 3 to 4 years. So that's the big number that we are tracking right now. What else is happening in the markets in the last few minutes? Yes, that perk up has happened. It's coming in on Tata Motors as well. Hindustan Copper, Timken India, Bosch, these are some of your names. So auto OEMs, manufacturing as a pack is actually picking up. On the losing side, however, you do have KEC giving up, Indian Bank, India Mart, Castrol India. These are some of the names which are in the red right now. Sudeep, it's that time of the month that we start discussing the auto sales data, and if you go by the early indications, it doesn't look like there's going to be a big recovery at least this month. What's your take on autos right now?
Couple of things. I think to expect anything great in this month will be a little unrealistic, Anisha. I think we have to look for the next couple of months. Festive season kicks off from September in its right earnest, and we'll have to watch for the numbers in September, October, November. That's point number one. Point number two, I think there has been distinct signals of rural recovery, which came from the FMCG numbers. And I believe that the auto companies focused in rural India has a chance of posting better numbers. So I'll watch out for the Hero MotoCorp numbers, definitely. I will also be watching the Maruti numbers quite closely.
Okay, point taken. So that's the view coming in as far as the auto sector is concerned. But the Global FinTech Fest is underway right here in Mumbai, and we have seen whole host of speakers, in fact, coming together to talk to us about what the financial ecosystem is looking like in the country. In fact, with much ado around UPI after RBI Governor Shaktikanta Das said that they want it to be truly global. My colleague Ankur got a sense as to how the ground reports are turning out to be. Let's take it across and hear out what's the latest that Ankur is picking up.
We are at booth of Google Pay at Global FinTech Festival, and one of the new things which has been launched by Reserve Bank of India Governor recently has been UPI Circle. Now, what is UPI Circle? Suppose there is a situation where you do not want to give wallet to your kid or your spouse, but now by adding them into the circle, they can be making the payments of UPI. Yes, that is a feature of UPI Circle. There is also a demo team with me which is standing here. These are the two phones. For instance, there are two users. The user 1 is having the primary authorization of payment, and user 2 is taking the instruction. So by approving the authorization of user 2, the user 1 can add them to the circle, and later on at their own convenience the user 2 can make the payments. So by adding into the UPI circle, you can enable other person to make payments. They don't need to send any photograph to you of QR code for making payments, but instantly that payment can happen only by authorization of the primary user. Apart from that, there is also a feature of enabling a monthly limit, so that even without your presence, the secondary user can make payments, can use UPI, but that monthly limit will be decided by you.
Okay, that's a snippet coming in from the Global FinTech Conference currently underway in Mumbai. In the meantime, let's just revisit where the market is going, because we are definitely seeing quite a bit of recovery actually played out from the session lows. In fact, a good 0.5% higher, 25,185 is where we're currently at. 4% of an uptick coming in for Tata Motors. I think we should bring up the intraday graph, because there is a sudden spike up in Tata Motors too. It's shot up, in fact, over 4.25% right now. So big move coming in there. In fact, it's overtaken a Bajaj Finance and Bajaj Finserv too, which were the leaders. As of now, there's Bajaj Auto also, which is holding out very well. Maruti, so sudden energized move across the auto pack right now. Sudeep, you think that bit of consolidation and a bit of a dip that played out when these auto companies started doling out discounts, and there were concerns around whether this is also an indication of a demand slowdown whatsoever, you think that period could be well over? And is there merit in then looking at autos again, or do you think they may have peaked out for the interim?
Couple of things. I think last few months definitely were the off-peak seasons, and during off-peak seasons, the dealers are saddled with inventory, and to get the inventory out, a lot of discounts are offered, and this is the usual practice for this part of the year. So I'm not too perturbed with that. What is more important is how the sales pick up during the month of September, October, November, December, because this is the period where the festive season and the good season for selling vehicles is coming. We'll have to wait and watch how things pan out during the next few months. As far as overall scenario is concerned, as I mentioned, rural demand is definitely picking up. There are green shoots, and if that holds, I think we will see a good festive demand for vehicles, and that should be music to the ears of the automobile companies. Now, the specific question of buying the shares of these companies in the market, I think it will to a great extent depend on the valuation at which they are already quoting, because a whole lot of things are already factored in these valuations, and the margin of error at such high valuation is very, very limited. If I have to pick a stock, and again, I'll go back to my rural demand theme, I think I'll go for Hero MotoCorp. Even valuation-wise, I think it's looking little reasonable. So amongst the two-wheelers, Hero MotoCorp will be my favorite at this stage, sheerly because of the valuation comfort we have there. Bajaj, for a long-term investor, is good anyway. They're doing all kind of good things, ticking all the right boxes. As far as four-wheelers are concerned, I'll be a little cautious at this stage, not because of anything else but the valuation. I would rather play the auto sector through auto components, auto ancillary companies, and that's a place where the opportunities are much bigger, according to me, at this stage.
Okay, so that's a point coming in on autos. In fact, Tata Motors, that move is something that is really taking the breath away. Nuresh, what's the view on Tata Motors, and anything that explains the move on the charts at least?
So looks like more like an expiry tech, nothing consequential as of now. But if it sustains above the 1140 mark, that would be a short-term breakout. The gap down would be covered. So overall, the longer-term trend is positive. In the short term, we need to see tomorrow if the price action holds on.
Okay, so that's the view coming in on Tata Motors right now. But for the index, it is holding on to decent amount of gains. Yes, there has been that bout of volatility that kept on creeping up. 25,150 is what we are watching out for. Though M&M is your top loser, while Tata Motors is the top gainer. Amnish Agarwal of Prabhudas Leela also spoke with us earlier today, and he talked about how he's looking at some of these new age tech companies, whether Ola, First Cry, etc. Hear out what his recommendation on some of these stocks are.
If you look at, say, Ola Electric or your First Cry, I think particularly in case of Ola Electric, the up move has been very sharp because the stock was offered at, I think, 75, 76. After that, it went all the way to 140, 150, and now it is around 125 or so. I think in some of these stocks where these are, you can say, relatively, you can call them new technology companies, I think we are going to see a lot of volatility, at least in the near to medium term, till the time there is some sort of stability which comes in terms of operations as well as in case of financials. So I think as far as IPOs are concerned, I think it is time to be very cautious given the way the valuations are there. Plus, particularly in case of the companies which are technology led, I think one needs to be very clear because the initial volatility can lead one to take, you can say, exposures at higher levels.
Right, okay, that's, the take coming in from Amnish Agarwal on a couple of these recent listings. Sudeep, anything recently from within the IPO pack that you may have actually picked up or even looked at?
Well, I've looked at Ola Electric, but I think that's one stock which I don't recommend buying at this stage. It's run quite ahead of its numbers. Of course, the potential is there, and we have to see how far the potential is realized. One has to remember a couple of facts. One is, electric two-wheeler is a very, very small segment as we speak today. They are getting into motorcycles, which is 2/3 of the market as far as IC engine is concerned. But one has to see, and one has to also remember that globally, two-wheeler EV hasn't yet been a success. So we'll have to wait and watch. They are doing the right things. At least the talk is absolutely bang on. Setting the battery plant is a good step and in the right direction. But one has to see how these things pans out and how they're effective in increasing the margin because globally also battery prices are coming down sharply. Now, under the circumstances, one has to wait and watch. So I will advise investors to wait instead of rushing into Ola Electric at this stage.
Hi, Ola Electric, 120 is where the stock is currently. I want to bring up Paytm as well. They've got the government nod finally for the downstream investment in the payments arm. That stock has been largely holding on to its gains and currently about almost a 3% or so kind of uptick. Sudeep, you think the cup of woes is now over for Paytm, and is it now finally out of the woods, or would you still be circumspect?
I think the issue with Paytm, as far as I'm concerned, is different. I think they have to really find a business which is working. And they have to stick to that business. I think multiple businesses they have dabbled in, and somehow they haven't given them the result they were looking forward to. At this stage, also, I'm not sure what is going to be the main business. Is it going to be the loan distribution or something else? One doesn't know. They are trying to do all kind of right things. They sold that platform for ticketing, and that probably was a right thing to do because they didn't have much focus there. But I will still hold my judgment on Paytm. It's still a very highly valued stock, and at this valuation, I don't think it will be justified to enter Paytm at this stage. Yeah, they've got some approvals. They've also had a lot of disappointments vis-a-vis regulators in the recent past. So I'll wait and watch. I don't think I will get into Paytm. If I have to get into some of the new age platform businesses, I will look at delivery. I think it's not yet in fashion, but I think they are ticking the right boxes. Post-listing, there were a long period of underperformance, but I think their green shoots are visible now, and one should look at logistics as an evergreen business, and things are picking up at delivery. And if they're able to effectively digitize the parcel, PTL as well as the express parcel business, I think the potential is significant.
Perhaps in some of these businesses is really significant, but it seems like people are eyeing the potential of the jewelry business now, because after the Aditya Birla Group announced its foray and set up its first jewelry showroom, you have now the statement coming in from Ms. Isha Ambani of the Reliance Group that Reliance Retail is also looking at entering into the luxury jewelry segment as well. So that means more competition for the likes of Titan. Let's pull up if there is any impact on that stock. And then of course they're talking about how they're looking at doubling the retail business in 3 to 4 years. So they talked about doubling Jio revenue and EBITDA in the next 3 to 4 years, and they're also talking about doubling the retail business in 3 to 4 years. Not sure if it's having an impact on the rest of the retail pack, whether ABFRL or Trent for that matter, even Raymond Lifestyle for instance, which is going to be listed on the bourses soon, plus the other lifestyle our retail brands, maybe increased competition for this whole lot. Sudeep, Trent is that interesting case. The valuations just keep on inching up. 115 times is what my colleague told me at the last count, but still continues to see buyers. Today, of course, the stock is a bit soft, but is there no merit in perhaps booking profit? How does one decide on a stock like Trent whether to book profit, if at all, or not?
Well, I think they have multiple engines working. Zudio changed the game for them, and they are expanding that franchise rapidly. And quarter on quarter, in spite of whatever we say in terms of valuation, they are beating the market expectations and creating a scenario where all the predictions about their performance are being beaten on a continuous quarter on quarter basis. Now they're apparently, in terms of the newspaper reports, they're focusing on their grocery retail Star Bazaar business. And, that's another area which has a potential of a significant scale up. We'll have to wait and watch. I mean, it's not for the faint-hearted, I must say that. At 115 times, it's definitely not for the faint-hearted. But somebody with a long-term horizon and patience, obviously, patients can look at entering, because all analyst expectations are being beaten. But I would like to probably look at a different strategy. I would say that look at Aditya Birla Fashions. I think they had a similar bunch of businesses at one point of time, and where ABFL has lagged much behind. Trent has moved ahead significantly. The pantaloons, as well as the potential to take the brand in a big way ahead, is significant, and the valuations are, of course, comparatively much reasonable. So, one little aggressive investor can look at ABFRL as well.
Right. Okay. That's, of course, Trent for you. The latest to be entering the index. Other than that, can't take your eyes off from Tata Motors and the spike up that stock is seeing. There's ITC, there's Britannia, there's Bajaj Auto, Maruti. Reliance, of course, has eased off a little bit from the top of the day. It's no more that 2% spike that came about when the bonus issue got announced, or the fact that they're going to be mulling a bonus, although the quantum is already out there. There's Bajaj Finance, Bajaj Finserv still holding good. There's Apollo Hospitals, Bharti, Wipro, Techem, Unilever. So a little bit of largely you'd have to say consumption and IT seems to be the flavor, and across the board consumption, not specifically to autos, but even FMCG. Other than that, banks, they continue to underperform, and so does actually M&M. It's really sticking out like a sore thumb from within the auto pack right now. So after those 3,000 plus levels, it's fallen all the way to 2760 as we speak right now. Kunal, what do you read on the charts of M&M? Because it's showing very distinct patterns now.
Yeah, but I think it's still going through a time-wise consolidation. The stock made a high in the month of June at around the 3,000 mark. From the last 2 months, the stock is stuck into a 250, 275 odd point range, from 3,000 as a high towards 2675 approximately as a support for the stock price. And when you look at the indicators have started to plateau. The volumes have dropped down. Now, after a uptrend, when the volumes pick up, if the stock suddenly gets into a zone where the volumes drop down and the trading activity starts to become more range bound, we call this as a time-wise consolidation for the stock, and that's a natural course of price action which happens after a steep rally into the stock price. I would probably believe that that's a healthy sign for a stock over the near term, and that's why you're seeing the auto stocks in the last 2-3 weeks is also getting into a zone of underperformance. I think except for couple of stocks like Tata Motors or maybe Bajaj Auto, which have moved up higher. I think most of the other auto stocks, larger cap fronts specifically, I think they are the ones which are going sideways. So I would probably believe that that could be a healthy sign. Maybe over the next few weeks, if the stock dips down to say 2650, 2600 levels, that's an opportunity to chip in or accumulate further.
Okay, so that's a view coming in on some of these stocks. But come tomorrow, we'll be talking about the MSCI rejig and the kind of flows adjustment that happened on account of that. We will try and get Somit shortly to talk to us about those stocks as well. But apart from that, GDP is going to come out tomorrow. So that's another important factor to watch out for. Fortis Healthcare is going to mull the fundraise. So we are watching out for that stock in the trading session tomorrow as to what the announcement is with respect to that. Trading of Tata Motors DVR shares will stop. So that's another important factor to watch out for cues for tomorrow. One important bit that you need to keep on your radar is Vodafone Idea. Supreme Court has finally decided to hear that AGR matter. The brokerages are saying that for now they haven't factored in a big upside from the clearance of the AGR dues. But if it does come by, that could be a bit of a bump up coming in for Vodafone. We should probably pull up all of these cues together because that will tell you the important things that you need to watch out for tomorrow as well. Prime Minister Modi is also likely to address the Global Fintech Fest, which is happening right here in Mumbai. So the commentary around that, the financials, the fintech, as well as the advancement in technology is something that the market will really keenly watch out for. But it's the day of the expiry today and just tracking the moves as to what we have seen over the last 20-30 days or so. So the Nifty has advanced for third series. Shriram Finance, Bajaj Auto, these are the stocks that have managed to lead in this month. Mid cap and the small cap index, of course, hit record high, and individual sectors like pharma, IT, FMCG also managed to hit record high in this series. What really was on the back foot was real estate. Nifty Realty Index is down almost 2.5%, and of course some of the PSU names also lost out. Sudeep, what do you think is happening? Is it a bit of a sector churn that IT, FMCG, pharma, the underdogs per se of the last 6 months are now making an up move, while the likes of real estate, which saw big moves in last year plus in the first 6 months of the year, is slowing down now?
Well, I think to an extent you're right, sector churn, but there are solid reasons for it as well. If you look at IT, I think with the US interest rate reduction becoming a reality, obviously the fear of recession in US is not there. And with that, the question of order cancellation, postponement of work orders and things like that is a thing of the past. And under the circumstances, the IT companies are definitely expected to perform well in the near future. Whenever US interest rates come down, historically, IT companies have performed well. So there is a strong rationale for IT companies to go up. Of course, we can debate the valuations and things like that, but fundamentally, IT as a business should do well in the near future. As far as FMCG is concerned, the reason, again, I must mention that rural demand was really, really weak, and that has now started improving. The green shoots are visible. If we look at Q1, FMCG numbers, some of the companies like Colgate, which has 40% rural business, they showed that things are improving. Look at Dabur results. It was clear they have a strong rural business. So rural consumption picking up should augur well for FMCG companies, and hence the excitement in FMCG. Pharma is slightly different, but again, the generic pricing pressure in US is reducing, and that is helping large Indian pharma companies, which have a strong US business, to start performing better.
Okay, that really is the word coming in, a bunch of sectors which are holding out well. In the meantime, well, Tata Motors is now up 5%, Kunal. 6%, okay. 5% on the futures at least.
I think one of the reasons why this could be because Tata Motors DVR could be stopped trading from tomorrow.
So
Yes.
how does it impact?
No, but that conversion would happen from Tata Motors DVR to buying the parent company Tata Motors. That could be one of the corporate action reasons.
Yeah, no, I was aware that there is that thing happening, but I couldn't connect as to what the reason could be perhaps. So what he's saying is perhaps there could be some trade happening where people are moving out of DVR because it's not going to be liquid enough, and you're buying Tata Motors, which will continue to be listed on the bourses. But in terms of the other big buzzers right now in the trading session, of course, you do have, Sundaram Finance, which is holding up. Hoodco, the management spoke with us earlier in the day. We were questioning them about the big growth that we have seen this year and what really explains the kind of momentum that we are seeing right now. They talked about how they're likely to become an IFC status soon. So that's something which will, augur further well for the company. But time now to take the buy today, sell tomorrow ideas. Kunal, what's the BDSC trade?
So I'll go with the first one, buy on ITC. The stock looking attractive towards the breakout. Targets of 520, stop loss at 490. And NTPC could be a contra trade. The stock over the last 2 days has seen a mild correction from 415 to 405 approximately. So would suggest a buy with a target of 430. Stop loss could be kept at 395.
Right, Naresh, what about your strategies?
So first would be a buy on ITC, a revised target of 520, stop loss at 496. Second would be a buy on IOC, which has been a relative underperformer compared to the other two names. Could break out a target price of 180, stop loss at 175 revised.
Okay, that's the take coming in right now on some of those BTST ideas. Sudeep, I know you've been sort of warning investors out there to be a little watchful when it comes to the PSU pack and in specific your defense railways. But do you think a large part of the consolidation may have played out for some of the railway names because the order inflows are still looking strong? All the specific cases didn't quite deliver in their quarterly numbers for sure, but the stock seemed to be back in the green.
Well, I'll be still, cautious. I think, the common mistake which investors are making or traders are making is that, order inflow is getting equated with, profit delivery or, I really don't know what, because the moment there is a fresh order inflow, the market gets excited and the price moves to even stratospheric heights. I think there's a significant gap between receiving an order and delivering and performing on it. There are costs attached to it. There are cost overruns, time overruns. So there are a whole lot of things. And to a great extent, this will depend on the efficiency of performance. And, in a lot of cases, that's not been demonstrated yet. So I'll be extremely cautious, particularly because of the fact that valuations leave no room for any error. And under the circumstances, it's better to be careful in both defense as well as, railway PSUs. I'm not saying they're bad companies. I'm not saying they are not getting orders. They're having a time of their life. There's no doubt about it. But performance will determine whether they deserve the kind of valuation it is quoting at or not. If somebody has to look at PSUs, I would still recommend looking into the power sector. That is a much better and safer place with most of the power companies participating and performing very well. Their efficiencies are also much, much better. NTPC, the largest power sector company, is a case in point. I think definitely merits a buy from a long-term investor's point of view.
Okay, Sudeep, we'll let you go on that note. Kunal, Naresh, good to have you guys on the show as always.
If you like this video, then like, share and subscribe to ET Now.